Morning all, how are we all doing? How's everybody? Welcome back to another Friday. How we doing? Just closed out this pound yen, by the way. I've just posted this in Telegram, but just had the retail numbers for the pound dramatically worse than expected. Which is good for pound shorts if you are short on the pound. So yeah, minus 1.2. We were a plus 0.6, forecasting a minus 0.6. We got a minus 1.2, so twice as bad as expected. So big strong moves on the pound pairs, which is good. I'm just going to quickly have a look at the news overnight. Japanese CPI came out as expected. Just seeing if there's any yen talk, which there doesn't seem to be. That's good. So no other news today. That's it. News is done. Just normal trading day today. Morning, Steve. Morning, Kennelly, Christian, Danny, David, Peter, Andres, JC, Virginia, Evans, Francisco, John, Neo. How are you doing? On time, Neo, today. Well done. There's a guy in my spin class called Carl, and he always comes into the spin class probably about either with 30 seconds to spare or about a minute or two late. So, but sometimes, Neo, you turn up as I'm about to leave, which is a little bit late. Morning, Paolo. Good job there's a replay, isn't there? Right. So, let's start with... Where should we start today? Yesterday, pretty good day on the indices, did 4.5 grand. The DAX yesterday was pretty complicated. We got double-ended on the DAX. So I hedged into it, got out far too soon on the long. I thought this was coming back down again. It didn't. It rallied back up again. So I did a naughty yesterday. As I was triggered short on it and we pushed up, it wasn't really going very fast and very hard. So we hit this propulsion gap and we had this high from yesterday, from the previous day. So I shorted it again and averaged into the position. So I got out of my shorts. The EA got out of its shorts there. So overall, about break even-ish on the DAX. NASDAQ was a really easy break short straight away, easy profit. The S&P, same thing, break short, easy profit. And the S&P, I think, the Dow was a hedge yesterday, yeah. So the Dow basically broke long. Just, you know, I keep saying this. You are the trader. You need to trade, basically. You need to understand price action and watch price action, even if you're using automated strategies. Right? We broke long yesterday. We had that massive wick form. Yeah. The next candle, tiny little green body, massive wick. Next candle, bear candle, massive wick. Yeah. We then pushed down, pushed up again into that area, which is this high, where those wicks were, where all those sellers stepped in. We could not penetrate that area. Big wick, huge bear candle. I closed the longs there, basically. So this is me making decisions based on what I see on the charts. Massive bear pressure at this level. They could not get through. So I exited the longs. We then pushed up, tried again, failed, and I exited the shorts. So made a nice little profit on the Dow. However, this one would not have been a nice profit if I'd have held on to those longs. Yeah. So, you know, even with this hedging version of the opening range breakout strategy, if you are getting hedged, you're wrong. So you've got to deal with those wrong situations. There's ways and means of building automation into a strategy to deal with those situations. But if I'd have held those longs yesterday, that would have been a guaranteed loss of $1,000 or whatever. So that's whatever it is. Yeah. But, you know, there's nothing if you can make more money if you actually watch what the hell's going on rather than trying to let automation run your life for you. It's kind of what I'm trying to say in a really bad roundabout way. Anyway, so DAX this morning, there's no gap to fill. Got 3 minutes to the open, so we'll quickly look at the DAX first of all. We've still got this gap fill, and this is weird price action. Well, it's not weird price action, it's just bearish. But I was expecting this week, obviously this is obviously Friday that we're in now. I was expecting after this rally down, we've got those lovely little tweezer bottoms there where they took that liquidity at that low. I was expecting a rally from that straight back up into there. We didn't get it. We went sideways. Then we went sideways and rejected and pushed down again. So the DAX is dropping. Well, not really dropping. It's, if you look at where it's gone this week, not really gone very far, has it? I mean, if you actually measure where we've gone this week, we've done an ADR. Literally in 5 days, we've done one ADR. So it's not gone anywhere. But I was expecting them to come up and get this sorted fairly quick. We've had no real news this week, apart from FOMC, which was only the meeting minutes and no rates. So it's a tricky situation with the DAX at the moment. Not quite sure exactly where this is going to go. So all indices basically seem to be pretty bearish at the moment, as you can see. So this morning, upside wise, I shall be watching this previous day's low here. So you can see this low here. We pushed down, we tapped into it again, we tapped, then we finally broke it. So that is a very strong support that broke there. If we come back and retest that level, which is this dotted line here, there's a chance we might get some rejection at that level. So I'll be watching that level this morning if it goes long. Short wise, it's all the way down to ADR, down to that monthly low. So there's absolute drop basically from where we are at the moment back down to that that low there at ADR. So very small upside potential risks, huge downside today. So we'll see where we go. We got 1 second. There we go. We're open. So there's your pre-market 15 range, which is broken short. That was a really quick break as well. If you've got slow execution on your broker, you probably won't have got that on. Have a look to see if I even attempted that one. No. So I'm not on the pre-market. The pre-market range is too small. So that pre-market range there you can see is 130 or 13 points. 185 or 18 and a half points is the minimum I want to trade, which is 10% of the average daily range. So too small to get into. And that's the reason, even though that looks like a beautiful break, I don't know if anybody's running the ORB EA this morning on the pre-market 15. It'd be interesting to know if you got in it, but you don't get in there because you either get slipped or the price moves beyond the price. If that range is too small, that speed of movement means you can't quite get those positions on. So that's why I wait for the 5-minute ORBs, basically, if the range is too tiny. So if you got in it, well done. We've gone straight through yesterday's low. And it looks like we are headed down to the lows at the moment. But we'll see what happens with the opening balance. Morning, Jerry. Morning, Brain Fizz. Closed by £1 yen as well. Hedging buys time. Yeah, exactly, JC. That's the good thing about hedging. It gives you time to sit back and watch what's unfolding in front of you. Because you know you can't lose any more money than you've got locked in, but you definitely can make money off it. So it's a good, it's a lovely. I'm loving it on the indices. I hate it everywhere else, but I love it on the indices. because we know we've got the thing with the indices is, you've got a definite time period to work within. We know we've got until 2:30 this afternoon to get out of a hedge, because that's when the New York opens. So you buy yourself the morning basically to figure out where we're going and watch what happens when we get to different levels. So when you hit a level, if it rejects, and then pushes up, and you've got a short and a long on, that short, is probably rejecting. So you can close your short out and then wait for that bounce. And if that bounce is just the size of the original break, you've got a guaranteed break even, no loss. It's a beautiful thing about it. Exactly what I did yesterday. Right. While we're waiting for this 5-minute candle, which got 2 minutes, we'll have a look at where we are with the ADRs, etc. So ADRs today, we've only got the one so far, pound yen. So I'm short the pound yen at the moment. We'll go through all my positions and pairs and everything this morning. But entry taken yesterday on the pound yen, so that was entry 4 up there. So took that one off basically in this propulsion gap. That's target basically. So I had the TP set there because if we are going range bound, or if we're going to continue trying to push with this pound, I just want to bank some money, and I can obviously add that position on. I can take it off again, add it on, take it off again, do whatever the hell I like with it. But if it pushes up to there and I haven't banked it, I'm just going to go back to break even on that trade. So banked that one. If it continues to push down, that's absolutely fine. My break even is only 1/4 of an ADR away. So I've got an opportunity to exit this if I want. I've taken 2 small drawdown controls on this, which is 1/4%. I've banked 0.5% on that one position. So I'm 1/4% up. If I get this into profit, I can just shut it and walk away. So that's hit ADR. Pound is bullish still. We've had nothing more out of the Bank of England. All the banks at the moment are radio silent. It's weird. I know it's the summer, but we've had nothing out the Fed. We've had nothing out the ECB from Lagarde. We've had nothing from Bailey, apart from press conferences. It's really quiet. They're all shut up and not letting anybody know what's going on. So it's really difficult to call where we think things are going at the moment. But we know we've got another 0.5 to 0.75% on the pound, so that is still bullish. However, those retail sales have really kicked it today. So there's your 5-minute opening range. So I'm not trading the DAX this morning. That's too big. So the 5-minute opening range is 62 points. 20% of the ADR on this is 37 points. So that's far too big of a range. So what you will possibly find today is we will make a little bit of movement, but not enough. So you can see by the risk reward multipliers here, that's 1R, that's 2R. Yeah. So if I take a short here to get a 2R on this, it's got to go beyond ADR today. Yeah. That's hard to make work. So if you had a stop loss there and you took that short, you've got to get beyond ADR just to get a 2R. So the risk reward is just not worth it today. Skip it, go on to trade tomorrow. It's just not worth trying to take it. The pre-market was the trade today, but that range was too tiny, too risky, too difficult to get on. So move on. Trade the afternoon. So yeah, pound wise, still think it's bullish. If you look at all the pound pairs at the moment, they're obviously all still bullish, all still rallying. At the moment, though, obviously the pound's being pushed back down based off the news. This is just retail, though, so there is still upside momentum in the inflation and on the interest rates. So we're still going up, I think, but this is just going to be a bit of a pullback. So obviously, with any position that you're in, to be able to carry on that move, you've got to pull back, take profit, build up the books, and then drive it forward. So this is probably just going to pull back. So all these pound pairs, potentially just looking for pullbacks on them on the last moves. So somewhere around about a 38 retracement is there. Your 50 is within that propulsion gap and that accumulation. So that would be a perfect spot really to add back into those longs. That's where they accumulated and drove the second leg. We've got a nice propulsion gap there, which is just above 38 as well. So it could pull back into there or potentially down into that propulsion gap. And then if we are going to continue and there's no more bad news, off we go from there. So potentially good looking move to the downside starting on the pound, but don't expect it to be too long. Morning, Great. Morning, Hood Guy. Morning, Marco. Jacob. Haven't got filled on the DAX. Yeah. No, you'll struggle to get filled on that this morning. It was too quick, too fast. When you get these big, fast moves, you know, by the time that candle has closed, the EA has triggered, done the calculations. All that happens within a second, you know, sort of half a second. Then it gets sent the order off to the broker. Broker goes, I'll think about that for half a second, come back, place the order. It's gone. You missed it. Yeah. Tricky one this morning. So there's your ADR, that one. Weekly ranges, there's quite a few weeklies. We'll quickly whiz through these, see if there's any opportunities still on these weeklies. So Aussie dollar Swiss. So where are we? Friday, Thursday, Wednesday, Tuesday, Monday. So there's your weekly high, your weekly low. So that is the weekly range put in, which got put in yesterday. So if you took that yesterday, well done. That's a lovely little trade. We're just sort of sitting around at the moment. So there's potential for this to maybe pull back. We should be pushing back up into these propulsion gaps at some point. So Aussie Swiss, but Aussie's not really a long at the moment. They've had bad interest rates. They've had frozen interest rates and bad, well, New Zealand's had frozen interest rates. They've had bad CPI, or negative CPI, I should say, which obviously is bearish for the Aussie. So it's not the best long in the world at the moment. Neither of the Aussie pairs are, Aussie and New Zealand, both more bearish than bullish. Euro odd will be obviously the opposite direction. I've got 3 shorts on this one, or 4 shorts, sorry, on this one at the moment. Another one just taken this morning there. Average is ADR, looking for a push into propulsion. I'm just going to adjust my TPs on this. Down that propulsion gap there. Okay. So target readjusted down into that propulsion. So 50% retracement on that move if it's going to continue long. So yeah, looking for a move down on that one. So there's your weekly range. It's the opposite of what we just looked at, peak to peak. So that was played out yesterday. Euro pound, big drop on this one. Again, opportunity was yesterday on this one. So we hit the weekly range on that 102. When did we hit that? Yeah, yesterday. So your entry was yesterday on that one down there. There was your reversal alert on the hourly. If you drop down M15, your reversal alert was there. So that was your entry yesterday. Geez, that was the only entry yesterday, that reversal alert. So that was your entry. There's your W. Beautiful trade. I'm in long on that one from here. That's an H1M5 mean reversion. So there was a 5-minute reversal alert on Wednesday on that one, on the hourly RSI extension. So I'm in one on that. I need to set TP on that one. Not even worth it. What it is. So that's what I'm going for, 0.25% on that. That's basically not quite a 50% retracement, but a little bit more than a 38. Pound odd. RSI extension on that one. Didn't get a short on that one for some reason. Why did I not get a short on that? Oh, yes. No, didn't get short on that. The reversal alert was here. So it's basically to do with the RSI extension and when the RSI extends. Because it moved on the news and then it pulled back, by the time the RSI triggered, or rather the reversal alert triggered, the RSI wasn't extended anymore. So you get this sometime on news events, because obviously there's no reversal alert until you get all the way down there. So you're sitting in it for like 4 hours waiting for a reversal alert. By the time you get a reversal alert, the RSI's gone completely down. So there was no entry on that one yesterday, but would have been a nice one if it had been tighter price action. You got your M pattern potentially going in there. And as I say, this is just a pullback. The Aussie is weak. The pound is strong. So only looking for a pullback into that area at the best, and then potentially a push back up again. So not the greatest weekly extension. It is the furthest though. And then the pound CAD, again, same thing, low to high. You would have had a reversal on that in there yesterday. In here would have been a reversal alert on M5 or M15. You've just had your hourly, which has obviously been caused off the news. So could pull back into there, could pull back all the way down to there, but more likely just going to pull back into ADR today and then either go into a range or push. Just going to quickly look at the news next week and just see what we've got coming up and when. Nothing on Monday. The BRICS summit starts on Tuesday. That might have some impact on the US dollar, depending on what comes out of that. So we got PMIs on Wednesday. What a rubbish news week. So literally we've got PMIs next week. That's it. There's nothing else. There's the unemployment claims for the US on Thursday. And University of Michigan on Friday, which is rubbish. It's a Jackson Hole symposium as well. Wow. Okay. So no news week next week. You want to take a week off? Next week. So there's nothing to move the market basically next week on any of this stuff. So it'll be another one of those, I think. RSIs. So my dash at the moment is split into 21 and 14s, just to monitor the 14s basically. But as you can see, there's no 21 extensions. So not in any of those. Everyone sec. So yeah, so there's no 21 extensions to look at all. There's a few 14s like the pound yen will be extended below the 25 level on the 14 RSI rather than the 21, but kind of not really using them. In fact, what I might do is stick it back to normal now. Because I'm not using the 14s. I was considering moving over basically. While it was summer, but I haven't needed to because there's been enough movement. Been enough movement, but not enough direction. What am I trying to do? H4, H1 combined, or H1 strength? We've got the 14s there as well now. Put it back to normal. So Aussie New Zealand on the 14, on the 4 hour. Oh no, sorry, that was just reloading. There we go, pound odd. So pound odd on the 4 hour, big extension on the pound odd. There. So a nice 4 hour RSI extension there. Obviously, as you can see, it's in an uptrend. So counter trend to play. So just be careful on the way down. There's your high and the weekly, last weekly high. Potential pullback. By the time you get there, the 24 will have caught up. It will bounce off the 24. Assuming we're going to continue in a bull market, obviously. Right, so we'll whiz through all the pairs again today because there's nothing to look at on the RSIs, on the hourlies. So I will go through all pairs and see how everything's going. So the other thing as well this week, we were looking, well, I was looking for an entry on oil. We got there yesterday. Well, we got to that low, which we've bounced off. I'm still not sure if this is the end of the pullback. So what I was looking for was a 38 retracement. And I said, didn't I, if you remember earlier in the week or last week, whenever it was, this level here, when we pull back into this level, it could quite possibly bounce and go into a range here while we're deciding what we're going to do, whether we're going to break this level and go for that $95 a barrel or not, or if we're going to get the pullback. So the 38 was what I was targeting, which was roughly this high here, as being the entry that I would really want. Somewhere between the 50, which is in this area of balance, and that 38 retracement, which is these propulsion gaps here. We didn't get there. We got this low, which is why I was kind of expecting it to bounce, because it was such a big, strong drop. We knew there'd be limit orders there, and they've triggered. So I'm not convinced that this is necessarily the end of this pullback yet on this move. I think we've possibly got more room. So it's a good looking long opportunity from yesterday. We had the oil inventories on Wednesday, which obviously dropped it, and then it reverted back yesterday. So this could well now, I think, go. It could well retest those highs. It could be the pullback it needs to rally. So it's a pullback on this move, but we've already had a pullback on that move, really. So oil is very, very tricky at the moment because we're at that level that we are range bound on here still. So it's that level there that we, in this area here, that we keep testing this area, but we can never break through it. This $83, $84 a barrel on our way to that 95 target. So tricky, but looks pretty good for a long, I think. I have to say, it looks good for a long. So you could take a long anytime now. Obviously, the perfect entry was yesterday at the support, but you've kind of had a little bit of a confirmation there. If you look at the lower time frames, like the hourly, you've had your reversal alert. Yeah, and you've retested it, and you've done another leg up, and you're in the middle of potentially doing another leg up. Yeah, so it's looking like it wants to go. However, the trendline junkies will be selling it here. So it could find some more seller support to go further down. So you could take a long from anywhere really here. If you put your stop under there, you're going to get a good 2R at the high. And if it breaks that high, obviously you're off. If it stops out, you know where you're going, 38.50 retracement. So it's going to come and bounce somewhere in this area here. So if that doesn't work, take a second. So if you're going to position, you could position trade this. If you're going to use a stop loss, your stop obviously goes under the lows, but you know what happens when you use stops. If you want to position trade it, get in, take a second somewhere in this area here, which is going to be roughly an ADR or so, averaging, and then go long from there. So it looks pretty good, oil, I have to say, but I'm not convinced. I've got so much exposure on elsewhere on other things, I just don't really need to take it in a minute. But try and analyze it anyway. Morning, Astro. If you have multiple entries on MT5, if you take multiple entries in MT5, is there a way to add a stop loss to all entries at the same time? No, not as standard, but you can build an EA for it. That's the only way, really. That. Yeah, so you can build an EA for it, basically. Let's just quickly look at the DAX, see what we're up to. So there you go. This is a perfect example of what I was saying about this range. Yeah, this 5-minute ORB today, too big, too much volume. And this is typically what you see after you get this massive move at the opening cash balance. You get this, like, holy crap, we've put so much volume in, we can't do anything more. And it's very difficult to get any kind of continuation move going. And it happens a lot. It's either there's a reason for that, and it's part of the speculative move, and it collapses, and you just don't stop, you don't look back, which means you can never get an entry anyway because you don't get a pullback. or it just doesn't go anywhere. And this is typically what happens the majority of the time. So, and and this is why on this new version of the development EA that I'm building, it's monitoring these levels. Yeah, the analysis and the testing that I've done shows that 10 to 20% of the range is kind of the sweet spot for being able to actually get a risk reward that is worthwhile doing. And secondly, actually get a position on that the market has enough room to move with. So it's like ADR. Yeah. If you suddenly, if you hit ADR by Asia on any instrument in FX, it's moved. It's done it. It's unlikely it's going to have enough volume and momentum and interested parties to move the market anymore, which is why we monitor ADR, because we know that 58% of the time the market stays within its average daily range. So it's the same with the opening cash balance. If they dump 80% of their volume in the opening cash balance, there's nothing left to trade. So therefore you don't move. You just rotate. The algorithms just take over and you sit there doing that all day, which isn't bad in itself because you've got a high and a low to work with now. Watch those levels for pullbacks. Yeah, and watch that for a pop. But that's really all you can do with it. So one of them days. So I got way too many MT4s open. Right. So we'll go through all the positions. So I just need to look at my Swiss yen as well. Hang on. Yesterday I did some drawdown control as well. Let me go through my positions basically first. Then we can have a look at all the pairs. So yesterday did some DD control, which was the 17th. So US dollar yen closed out 1. Couldn't have timed that much worse. But anyway, closed out 1 up there. Aussie dollar, US dollar. Fourth drawdown control done on this one, on that position there. So that's the most recent position, DD control. Then as we push back up, added another. So the average is around about 150 ADR or so. So again, looking for push up into that propulsion. Just make sure I've got the targets adjusted on that. Those down. It's 225 ADR, so I'm not hitting that today. Pound New Zealand. So did a DD control on that one yesterday morning off of that position. So there's 1, 2, 3 on that. Third one obviously is there. So we pulled back to that one and now we're back at that one again. So just looking for a push down into a propulsion. Need to adjust targets on that as well. Okay. Aussie dollar, US dollar. Looked at that one. Oh, sorry, I did 2 DD controls on this one. Look. So there's one there, and there was a second DD control taken on that position. So the second DD control on position number 1, basically. So 2 done on that one yesterday. This has just been grinding. It's just, a week of sitting in pain, followed by 3 days of sitting in pain, followed by a daily push. Just terrible. And euro, US dollar. Sorry, it's euro odd. Euro odd closed out another one of the initial position. So I've done 3 DD controls on that one at the moment. ADR is the average. That was my target previously, which is way beyond ADR now. I'm just going to move my target down to 200 ADR, which is back down in these lows. See if we can get out down there somewhere. It's a difficult one, this. I mean, it's just, this is what? 1, 2, 3, 4. 13 days now, nearly 3 weeks of trading. We've moved a grand total of 428 pips, which is about 3 and a bit ADR. But look at the way it's been done. It's like just a step up, step up, step up. It's just, you know, ever so slight incremental movement, but majority of it totally sideways. Awful trading conditions. And then that pound yen this morning is the one that I've shut. So that's basically what I did yesterday. I've got half of that back this morning already. So positions on at the moment, Aussie dollar, US dollar. Actually, I'll tell you what I'll do. I'll go through all the pairs and then we can look at my positions as we get to them, can't we? Easiest thing to do. Johannes, is there a way to add the Sunday open? The Sunday open on the support resistance indicator? No. Don't use the Sunday open. It's only 2 hours of trading and there's no volume. Just forget it. This is why brokers don't have it. I don't have the Sunday on my chart. If you've got a broker that's got a Sunday on their chart, get a broker that hasn't. Nobody uses Sundays. Not just not used. Market opens New Zealand. That's the first open in the world, is New Zealand. You get 2 hours of trading before the rest of the market opens. So you just do not include that. There's very, very few brokers now. I haven't seen a broker that uses Sunday as a day for a long time. I don't even know if I'd be interested to know who you're with, because I don't know of any brokers that do it anymore. Morning, Thimba. New Zealand dollar, US dollar, possible pullback? Possible. Yeah. Got symmetrical triangle forming there, look. Yeah, I'll be wary about trying to long this. 1, 2, 3, 4, 5, 6. But that's a counter trend. So this is a bearish symmetrical triangle, which tends to break down. So it's kind of, symmetrical triangles are very similar to flags in the fact that you would expect them to break in the direction of the flagpole. Symmetrical triangles are very much the same sort of pattern. So you'd expect them to break to the downside normally. But yeah, good break up from here. You've got a nice retest going on, but no follow through. And look at the wicks. Sellers are, when the market turns, the sellers are more aggressive in their movement than the buyers are. So be wary. Trying to long the New Zealand at the minute. They've just frozen interest rates. But then again, the US dollar has, again, not got anything really going for it either, has it? So this could go absolutely either way. Market moves on news. Then it sits there and waits for some news. Then it moves on news. Then it sits there and waits for some news. We haven't got any news coming up. So I'll be looking to buy it down there and sell it up there at the minute. There's nothing really you can do with it, is there? Sunday trading screws up moving averages, and yeah, Sunday trading screws up everything. This is why it's not used. Nobody has it on their charts, because all instruments, like, so for example, right, ADR. If you use the ADR indicator, and you have a Sunday on your chart, which is literally 2 candles like that, or a couple of candles, yeah, that's got an ADR. Right, so the normal ADR, let's say, for example, is 64. The ADR on that Sunday is going to be something like 6. That changes your average over the last 10 days, because you've got 2 days in there which are tiny compared to the normal. So your ADRs will be all out. Your moving averages will be out. Your RSIs will be out. Everything will be out. So if you have a broker that includes Sundays, get rid of the broker. Nothing you can do about it. Just get rid of it. Yeah, and also as AJ's just said, there is no volume in the market either. So you try and place a trade. You see what the spread's like. Normal spread. Sunday spread. There's no volume. There's nobody trading. Everybody's asleep. New Zealand's just woken up and they're getting ready to start the day. It's like the DAX pre-market, yeah? So there's your open. There's the exchange open. That's the DAX trading pre-market. That's the open. That's the market open. That's the pre-market. This is like your Sunday. Just not usable. Morning, Tammy. Right, so Aussie dollar CAD. So I'm also looking for support resistance bounces as well at the minute. Just looking for decent levels that we're approaching because we're in summer trading. As well. Obviously, these RSIs, there aren't any RSI extensions. So if we're not getting on into RSI extensions, I'm looking for levels that price is reacting at to try and get some entries in, basically. Swiss yen, we're just approaching ADR. I will get on with the analysis in a minute. Sorry, there's a lot going on this morning. We're just approaching ADR. So I'm just going to trail this with 190, 19 pips. I'll break even on that. Actually, no, I'll put it there for the minute. If it continues, fine. But this is what, 1, 2, 3, 4, 5 hours. It's pretty much the entire session, Asia and London so far, straight down into ADR. Yeah. So this thing is getting pretty exhausted and it's probably going to want to pull back from here a little bit. We've just filled a propulsion gap. We're just hitting ADR. My target is down there, and I think that's still valid. However, I've got a decent amount of exposure on the yen already, and I've got an option to bank roughly 0.25%. So I'm going to do it because we're sitting in an area of balance. So I'm just putting a trading stop on this because it's moving so fast. And if it continues to drop in this way, absolutely fine. If we get a catastrophic meltdown today and the yen powers up like crazy, brilliant. If it doesn't, I'm just going to put it in the bank because I need bank stuff at the minute because this thing's just flip-floppy. So Aussie dollar CAD, nothing particularly exciting that I can see there, really. We're sitting in area as a balance at the moment, two of them. It's just not going anywhere. So looking for pushes back up, but obviously that needs the Aussie dollar to strengthen up. At the moment, the CPI figures make it bearish. The Canadian dollar is kind of neutral at the moment. Oil is rallying well, but obviously oil is just having a pullback, so that weakens the US dollar, the Canadian dollar as well. So again, sideways. A week against a week equals range. Not going anywhere. There's not really any decent levels coming up at all on this. If you look on the hourly chart, there's nothing you can see to the left that's an obvious area we might have limit orders trigger. So just waiting, basically. This is more of a short than a long, and you can see that we've got a resistance bounce in play at the moment. So there's your previous support. We broke it, used it as resistance. We've used it as resistance. So it's a nice looking short opportunity from where it is right now. So you could drop down M5, M15, wait for short reversal alerts, which you had this morning in Asia there, and take that one. So yeah, like it short, not long. Actually, I really like that short. I think I've already got a CAD on at the minute. DAX has just broken to the downside. Yeah, I've got a CAD yen short, just about to TP on that. Look. Uh, 184. Okay, so I'm just trailing that. That was my TP. We're very, very close to the TP, so I'm just going to trail it. If it wants to continue, fine. If it wants to pull back, I'm out. It's got 3.8%. I've banked 6% this morning on the account, so I'm not going to jeopardize that. The reason I was looking at that account was because I was thinking of taking a short on that. Really nice wick rejection on this. Look, buyers unable to make any progress today. We opened there, we pushed up, we've made a lower high. We've pushed back down. Forget that wick. That's a broker candle. So it looks more bearish than bullish at the moment. We've got really nice wick rejection to the upside. There's no news today. This is the thing. So there is a possibility of getting into this and not getting anywhere. So just wait for that chart to update. There we go. Half an ADR is 32. So putting a sell stop on that. We've got tweezer tops going in right now on that, on the hourly. Yeah, lower high. Looking for a push back down into those lows. So going in with a, I'm just going to put it underneath the low of that previous candle to trigger. So if this continues, i.e. basically the buyers are not making any progress today. If the sellers do take control, they're going to push down below that low, going to enter short. Stop above the highs up there. Plenty of room above that high in case it just wants to go into a range and sit around all day, in which case then I can close it out later. And then target, we're going to push the downside. Obviously, we're going to break that low. But unlikely we're going to get 125 ADR on a day where there is no news. But we'll see. So there's Aussie CAD. Aussie dollar Swiss, pretty much the same sorts of thing. You've got a previous support, broken, turned resistance, pushing lows. So this is Aussie dollar weakness, basically. So shorts on that one. Lots of propulsion targets to the upside on this, but we've had lots of propulsion targets that get orphaned. You know, we've had them retested, obviously, multiple times. But we're not able to get through and fill them because this is so weak at the moment, the Australian dollar. The Swiss franc is very strong at the moment as well. So, yeah, I wouldn't want to really look for longs on it at the minute. More shorts, but nothing particularly exciting. There's no levels coming up that we can look at to use. Aussie dollar yen, Swiss yen ADR. There we go. So we've gone beyond ADR now. So both trading stops kicking in. So I'll just get out when that pulls back. Aussie dollar yen. So we're at a really nice level on this Aussie dollar yen at the moment. This is last week's low and the previous week's low. Then we've got last month's low there. So if we are going to get a reaction, i.e. some weakness back off of this yen, this is where it's going to happen. However, if I was going to long anything against the yen, it wouldn't be the Aussie because the Aussie's weak, as you can see. The yen has been very, 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 very weak over the last couple of weeks, and it's been going down against the yen. So that shows you how weak the Australian dollar is. If we've had a weak yen and this thing's been going down against a weak currency, this is obviously weaker. So I'd be wary about trying to long this support. You can see the limit orders have already triggered. Yeah, so the limits at this level triggered here. Yeah, we pushed into it, limit orders triggered. Buyers that triggered those limit orders are being run over. Yeah, we break that low, we're flushing back down to the last month's low. This movement at the moment that you're seeing, if you look at all the yen pairs, yeah, this is massive yen strength coming through at the moment. What did we say about that 145 level on the US dollar? Out of the Swiss yen short. Right, so the EA has closed this out for me. So the total of those two positions there is 1.5 ADR. So the EA closes automatically at 1.5 ADR, which is done. So if you look at all these yens, it's a massive yen push. We were looking at the 145 level on the US dollar yen, which is kind of the gauge. We had that intervention talk coming through from Japan this week as well, saying stop it, exactly the same as we had there. They did. Is this the second version of that? So we've put a new high in. We've got that low. So potentially now we could well have a flush and push this US dollar yen for about a week or so. So it might be the start of that. It might just be a false move, and it might just go into a range from here. I don't know, but I'd be wary about longing the yen, longing anything against the yen, i.e. going short yen. Yeah. So I'd be looking really to short stuff against the yen rather than long against it at the minute. However, if we get back down into that monthly low, this will have had a 1, 2, 3, 4, 6 maybe day drop. Be ready for a pullback. So that looks like an interesting level maybe for next week. Aussie New Zealand, just a sideways mess really at the moment. You're bang in the middle of this range. Where's it going from here? No idea. It's kind of trying to bounce off of these levels here, isn't it? But it's not really got anything. So that's where I'm interested in shorting. That's where I'm interested in longing. Right now, I'm not interested. Aussie dollar, US dollar. Got longs on this one from the H1M5 entry back here. We broke that low. Then we had all that bad news on the Australian dollar. And then we had more bad news on the Australian dollar in the form of the CPI figures. So just basically got in at the wrong time, waiting for the Australian dollar to have a little bit of a push or some weakness in that US. Because the Aussie dollar has been weak now for days and days and days, if the Aussie dollar now starts to find a little bit of strength and we get a little bit of weakness coming through on that US at the same time, this thing's going to rally very easily to ADR. So at the moment, my average is roughly 150 ADR, and that's what I'm looking for. We've got multiple lows on this way down here. Any of these could act as potential resistance to continue to push this back down. So it's a tricky one to get out of it because it's just trending very nicely to the downside at the moment. But I've got 4 positions on it. I'm not far away from an exit. It's just about 1% roughly in drawdown. So it's not a worry at the moment. So they go 0.8 banked. So that's just cancelled yesterday's losses. So yeah, hopefully we'll just get a weakness on that US dollar, but we've got no news. We've got no catalysts now to do this until next week's PMI figures. So there's literally nothing to move this market. So those are your Aussies done. Just catch up on the chat. Morning, Gordy. Whipping post. Thing with GJ is the swaps just drain profits the longer you're in. Yeah, cost of doing business. Wouldn't worry about it though. Just the cost of doing business. Same as opening a shop and having rent. Swaps, commissions, spreads. Rain, in FX position trading, is making the ADR distance between trades bigger considered less aggressive? It's not less aggressive, it's just different. What you'll find is if you, with the distance between your entries, you can backtest this, go and backtest this. What you will find is if you spread your entries wider apart, that has the immediate impact that has is on your drawdown. So your drawdown becomes larger, slower. So it slows the whole process. So the swings that you're trading need to also be larger, yeah, to get out of them. Because if you're spacing like 2 ADR apart, for example, your average is 1 ADR. The market stays within ADR 58% of the time. So it's quite possible it will push an ADR to the upside and you won't even get your break even. You'll just about get to break even on it and then it will go into a range and start a new leg. So if you put them too wide, you'll find it very hard to get out of your trades. If you put it too close, you're going to get in too aggressively, too fast, with too much lot size, going to draw down too quickly, and it's going to become painful if the market doesn't do the normal swings that we expect it to do. So it's just different. There's no right, there's no wrong. I would advise, which is what I cover in the bootcamp, spacing your trades roughly half an ADR to 3/4 of an ADR apart. Reason for that is we know that 58% of the time the market spends its life within ADR. Yeah. So if you're scaling in within an ADR, your average is going to be kept within an ADR a lot easier than if you're going much further away. Yeah. So between half an ADR to 1 ADR, which is why I use 3/4 because it's in the middle, is a sweet spot. Don't forget, your goal when you're position trading is to move your price to an area that we can get out of our trades. So if you can keep it within an ADR, even if the market doesn't hit ADR, it gives you an out. Yeah. When we get an ADR push followed by an ADR push, when the market does an aggressive pullback, that's where you make your profit. So we're waiting for the banks to profit take. The bank's profit take moves will be 38 or 50% retracements in a continuation. Yeah. So if that is 3 ADR and that is 1.5 ADR, you've got to get your average within an ADR to make profit. So if you space too far apart, you won't get out on those swings, those pullbacks. Yeah. Don't forget, what we are trading is the counter trend move from the bank. So when the bank is pushed, it profit takes, and then it either reverses or continues the trend. Whatever it does, we don't care. We don't know if it's going to do that or that. It doesn't matter to us. What we're doing is we're taking this. We're mean reverting. Yeah. So you've got to make sure that your positions are close enough to keep you close enough to that mean reversion. So look at this one on the chart here, for example. So let's say, for example, we use that as the move. To mean revert this move, they need to revert 38 to 50. Look at where my average is on the 50. So worst case scenario, I can just get out and go, screw it, that was a crap trade, and walk away. But we don't take losses. As traders, we need to reduce our losses. The way you make more profit is not by trying to get bigger wins. It's by removing the losses from your trading. If you have a 50% strike rate, yeah, and you can increase that 50% strike rate to 80% and use the same risk reward ratio, you make more money. Yeah, you're not doing anything different. You're not being more aggressive, trying to get 5 Rs, trying to get those big weekly runs. You're not trying to do any of that. You're just trying to remove all the crap losses that you keep taking. So if you can do that and just get out at a break even on something that's been pushing against you for 3 weeks, that's a win because you haven't lost any money. You got it totally wrong for 3 weeks and lost nothing. So all the stuff that you get right is just money. Yeah. But to achieve it, you've got to make sure that you're keeping this average close, which means you've got to keep these positions close enough to be able to take advantage of the swings. Because we don't know what the swings are going to be. There's a 50. Yeah. There is a 38. We didn't know if that was going to be a 50 or a 38. It was a 38. You don't know what it's going to do. You don't know whether it's going to push back and go all the way back up to the highs, because nobody knows. If we knew that, we'd all be billionaires. We don't. So you can only extrapolate and forecast where you think it may go when it makes its move. So we don't know when it's going to go. We don't know how far it's going to go. We know it's going to go at some point. So our job is to make sure that when it does go, we've got an exit. Yeah, that's your job. Because you can't predict the future. So, you know, the system has to rely on you not knowing where it's going. Otherwise, you can't make money. This is where everyone goes wrong. They spend their entire life system hopping, trying to find that one system or strategy that can read the market. You can't read something that's random, that is not predictable. So there you go, Aussie US. CAD Swiss, not going anywhere. Sideways, mess, rubbish, crap. Just leave it. There was a potential long from here. I tried to take it. I failed twice. So I'm not interested. It's just not going anywhere. We are at a monthly low now. So again, this support area is absolutely beautiful. And this could be the one. But look how long it's taken to go absolutely nowhere. So if you get into this, do not try and get anywhere more than a couple of hundred ADR, 2 ADR move to the upside. It's just not going to get it. So rubbish. CAD yen, like everything else, I'd be looking for shorts. That's the trade that I took on the other account. There. Yeah, so there's the entry somewhere in there off of these highs. This one that's open at the moment. The MT4s, which is this area here. That's where I got in. Yeah, that's playing out at the moment. Watch it when you get back down into these lows out of that propulsion. If we're going to remain range bound, that's where I'll be looking for bounces. Potentially, it could bounce off of this 50% retracement, which is where we are now, if we're going to continue with weakness on the yen, but we don't know. So we will see. Thought feeder, what do you think happened with the DAX this morning? Big opening cash balance, but followed by a big short. Don't know. I wouldn't call that a big short. There's the cash balance. We're basically, I mean, it's had a big push down. So this is just the sellers try to start a move. As I said, this is where I think we're going today, ADR. So that, but look at the risk reward. For me, from a risk reward perspective, that isn't worth it. 1.5 hours to do an ADR move, just not worth it. But yeah, I think we possibly will try and make a run for these lows. That's where I'd like buying it today, if we can get down to ADR. But not really a big move, is it? Nice if you got it. There's an obvious outside bar reversal, look there. But it's only obvious when you see what happens afterwards, isn't it? Yeah, and then this is the beauty of hindsight. Yeah, you can look at this and go, well, God, look at that obvious outside bar bearish engulfing reversal signal. If that next candle had been green, I wouldn't have even looked at it. But you can see why that happened. But there's a 50% chance that that would have then put a green candle in and shot up. This is why price action candlestick patterns are as good as a 50% strike rate, because yes, they paint and tell you what's happened in that candle, but what happens in the next candle is down to what happens in the next candle. As it happens, these guys that started this sell move found some people to back them up, and off we went. So, but yeah, it's got a chance of of pushing down, I think, today. But equally, it's also got a chance of meeting exhaustion and going into a rotation session, which isn't going to make anybody money because it's done its volume. So just skip days like that. The beauty of trading indices is you've got 4 of them, in 5 of them if you want to include the FTSE, if you want to trade the FTSE. So there's 5 of them every day, or 4. I don't trade 5, but 4, that give you an opportunity. So if that one doesn't present itself with a perfect thing in the morning, just trade the afternoon. And if the afternoon goes wild in the same way, you just go Friday and go and do something else, because there's plenty of other days that will be absolutely perfect and spot on. It's just some days it's not. CAD yen's pulling back. Look at these wicks on the CAD yen. Rejection. Try it again. Rejection. Trying really hard. Rejection. There are buyers in the market, and they are trying very, very hard to resist this move. This will be retail, I reckon. Wrong one. No, they're all shorting it. Look. So this is market's pushing back hard. Doesn't want to go short because retail's short. All the orders are the upside. Look, but no. Anyway, I'm getting out of that in a minute. I'll be stopped out on that shortly. I think I've probably already stopped out on. The other yen. Oh yeah, no, I hit target on the other end, didn't I? So, yeah, Swiss yen. That's the next one. So yeah, hit target on the Swiss yen, which is 1.5 ADR. Straight off of ADR, look. Again, this is why we use ADR. This is why you start looking to get out of trades when we get to ADR. The market has put in its average daily movement already by London. Yeah, it's exhausted. So it's going to need a rest. So it's pulling back. Doesn't mean it's going to stop. It could well go 225 ADR today, but it's going to need a rest because it's been rallying very, very hard and it's done a lot of liquidity. So, so this one, obviously, if we're, the question is at the moment, are we going to continue this yen weakness? Is the US dollar yen going to try and rally beyond that 145 and hit that 150 level? If it is, This is obviously going back up again. So we're looking for areas of support to try and find an entry to go long. So somewhere down here, drop down into your lower time frames and try and find entries long. Might get an RSI extension to take a long on this as well. If the EA does take some longs on this off of RSI extensions, I shall be monitoring, because I'm not sure I actually want to go the other side of it at the moment, but we'll see. But so that Swiss yen not really going anywhere. We're coming off these lows here, look. So we might be potentially finding buyers in this area here. So we pushed out of these highs, put a little propulsion gap in, retested it, buyers added more positions. Then we sat in balance for 3 days or 2.5 days. Then we broke. There's your propulsion gap for the break. And this is where the buyers seem at the moment to be looking to add more positions. But it depends on the strength of that yen. So we will see on that one. Very tricky. Oil, I've already done oil, Gordy. I'll do it again in a minute. On my charts, it's just bounced off the monthly low. DAX. You've obviously got different charts. So trade your charts, not mine. If you've got a bounce off the monthly low, go long. Mine's not quite there. On the RSI dash, when something goes green, does it stay green for a while, or does it stop being green as soon as the price goes back out of the designated level? Yeah. So it measures, the RSI dash measures the RSI. So if it's beyond the level, it's coloured. If it's not beyond the level, it's not. And it changes on candle close. Euro odd. So I got shorts on this one. Have I just covered this? Did I start on the euros? No, I didn't, did I? Euro odd. I've looked at this already for some reason. Yeah, ADR. It's just grindy. I think I have covered this. I'm getting deja vu. I think I've covered this. I'm short. There's no levels to look at for resistance bounces. Just watch all the levels on the way down for bounces. This propulsion gap is what I'm looking to get filled, and then I don't care what it does after that. But euro should be stronger than the Australian dollar. It is, but euro really hasn't got a lot of strength at the moment. So I get the feeling this is turning again back into its whipping boy status, where it's just neutral. Any kind of strength in that Australian dollar, and this will come down, I think. We've got no real news apart from the PMIs next week on the euros either, so there's no news until next week to worry about. So it's just a case of normal market movement taking control and moving it wherever the hell it wants to go. Euro CAD. Pound yen RSI alert to the downside. That's just a 70. So we've got some 70s lit up now. All yen pairs, look. Pound yen, Euro yen, CAD yen, and Swiss yen. Yeah. So just starting to get extended on these yens. I want it to be more extended before I'm interested in taking along, especially on the yens at the moment. It's got to be... if the EA does trigger on these, I'm not sure I want to actually take them. I might just give them a day and see if anything happens. And I just don't want to. All this talk of intervention, I'm just not really interested in taking any yens in that direction. I want to be on the side of the yen, so shorting everything against the yen. Euro odd, sideways mess, obvious support, obvious resistance. So we've got an interim support resistance area running as well, kind of down here-ish. It's just a sideways mess. So it'll be sod's law. Whatever one you take, it'll just go beyond it. So if you're going to do it, give yourself a good half an ADR stop. Half an ADR is 41. So the difficulty with these is, let's say we get up to these highs here from the previous day, ADR today. If you short that with half an ADR stop, you've got to get at least half an ADR out of it back to the downside, which brings you back down into the bottom of that range. So there's just so little room for a decent risk reward trade on it. It's just not worth bothering with. Position trading wise, obviously it's totally flatline. You can see the last short I took, I got out of down there, that propulsion gap, because it wasn't going anywhere for 5 days. I'm glad I did. just all a mess at the moment. Not going anywhere. Euro Swiss, quite a big wide range on this. We broke the 2-week support, so there was an entry there. I tried to long this and got stopped out on it yesterday. So I have an alert set at 125 ADR to trigger to get into this down there as a long. Euro Swiss is very, very hard. It's always bearish. Always bearish. Because when you get strength in the euro, you get strength in the Swiss franc. The Swiss franc also gathers strength from all other currencies. When you scale out of any other currency and you've got nowhere to put it, you put it into the Swissy. So this has always got a little bit of an edge over the euro most of the time. So it's one of those which is, as you can see, look, it's very difficult when the Swissy powers up to get out, especially when you get some euro bad news as we had. So at the moment, I'm just not interested unless we get to range extremes, these monthlies and like very strong weekly levels. So there's 3 weeks there, 3-week high, 2-week high, 1-week high. There's your high. If we get up to there, I'm shorting it because we know that the market is not interested in letting it go above that level. That's back in the 72.24 range as well on the daily. So it's a lovely short area. But down here, ADRs also particularly good area, which we'll probably get a bounce out of. So I'll be looking for longs down there somewhere if we can get down there, which is unlikely today. Euro Swiss have one long on. This was an entry from Wednesday. RSI extensions. This was an H4, M5. Beautiful support level as well. Look, technical level. Didn't work. Yeah, so just dropped. Pushed up into propulsion. We've tested that twice. We know there's more sellers on board than buyers at the moment. So we need a pullback now off of this hourly reversal alert and try and get some momentum. I'm looking to get out here, which is this support resistance, which is just above that propulsion gap, but it's a tiny little profit. It's literally 0.25%, just under, just over, but it's just literally, if I can get that, I'll be happy at the moment. That's just going to be above a 38 retracement on that move. So if we're going to continue with pound strength, which is what's causing this, I think a little bit weakness in the pound off these retail figures. If we get some nice PMI figures from the euro on Tuesday, Wednesday, is it Tuesday? Yeah, Tuesday. Sorry. Wednesday, sorry. Wednesday. We'll have hit that by Wednesday. We should do anyway, unless we're just going to sit here like this again. But, you know, going to that movement. But, yeah, just looking for a move up into there at the moment. There's no other really decent support levels until you get down to this monthly. We've got this monthly and this monthly. So this area here at ADR will be a scaling point for me. Average will be there, and I'll still probably target that level. But it gives me more options if we can push down. So I'd much rather this actually push down. I can get a second entry because it gives me easier outs then. But sideways mess, always is. Euro yen, same as all the others. I'm short at the moment. Target down at the top of propulsion, which is the bottoms here. So this was where the Japanese said, hey, we got something amazing coming. This is where the news came out. And we went, no, it's not amazing. So look, it's target that low as the absolute maximum on this down there. But it's just bouncing off of this high at the minute. So anywhere in this balance here, range, anywhere in there could act as a potential support to bounce back up again. So we'll see whether or not we're going to get this continuation on the yen. Euro New Zealand have 4 shorts on this one at the moment. I've taken 2 drawdown controls on this at the moment. So, and I've also banked one there. So you can see, had that trade put on there, basically, at the double top. So that was just almost perfect spacing, basically. We pushed back down into range lows. I banked it because I just want to get something banked. pushed back up, added that position on. If it comes back down to here again, I can bank that again. And if it continues to do this, it can do this for the rest of the year for all I care. I will just keep banking it. The New Zealand dollar weak based on stagnant interest rates now. The euro, even when it gets interest rate rises and decent CPI figures, does not seem to be able to rally at all. So any kind of sideways movement in this euro and one piece of news positive on the New Zealand dollar, this thing's coming down an ADR or so, which is out. That is probably the most logical exit now. But I will wait and see what happens when we get down here. It's not going anywhere fast at the moment, so I'm just looking for an exit on it, really. But yeah, range highs down to range lows. Euro US dollar, we know about the US dollar at the minute. It's just not really got any legs, and the euro is very much the same, hence a lot of sideways movement. I don't think there's any bias either way on either of these guys at the moment. Big news event there, which we retested. So looking for a move up into propulsion, really, from the lows, though. So if we can get an ADR hit today, I'd be interested in taking that double bottom, because I think there's going to be limit orders triggering down here. So we should at least get enough momentum to get an exit, hopefully. But there's no bias, euro US dollar, I don't think, at the minute. Yeah, it's just wavy. Euro has been stronger, but that's because we've had a weak US and we've had a fairly strong euro. Euro's not really as strong at the moment, so quite possibly that for the future. So that's all the euros. What RSI settings do you presently have? DAX, what RSI settings do I presently have? I don't trade the DAX with the RSI. I don't position trade the indices at all. Pound odd. Long at the moment, obviously, as you can see. We've nicely extended on that one at the minute on the 4 hour. We've got a nice little kind of reversal starting to trigger there. I'm not really particularly interested in shorting the pound. So it's very difficult on this one. When you get out into the clouds, or out into clean air, when you've broken a high and there's literally nothing to look for any kind of resistance at, you're just hoping every time you get a reversal alert that is the one, because there's no other reason for it to move than there's some sellers come on board. But because there's some sellers come on board doesn't mean they're selling. It means they're probably taking profit on the buys, ready to put a new leg in. So it's very hard to take a short on this. I'd be interested in taking longs on it back down at these levels here. If we could possibly get down there, as I said, 24, we'll be catching up then. And as you can see in a trend, the 24.72 is your friend. So we pull back into the 24, we hold the 24. If we don't hold the 24, we bounce at the 72. Yeah, so the 24 and the 72 act as a buffer zone when you're driving a trend on the daily chart. So yeah, I don't really want to short it. I'd be interested in possibly longing it out of here. But we're going to need some confirmation from Bailey as to what we're doing with interest rates. Pound CAD, same thing. We've got a high there, though, for a potential double top, although we've just had negative news. So I'd be watching this area here as well. We've got multiple levels, as you can see on the chart here, to the downside. It's a really choppy mess, this. So, it's hard to pick pullbacks in it at the moment. So you could measure that entire move and go, let's see if we can do that. You could say that's already done, so we're measuring that, in which case then you'll be looking for a bounce out of that high, which is the last week's high, and then trade it back up into that high. There's all sorts of things you can do with this, but I'd much rather wait for something a little bit cleaner. So this high here, really, or this high, anywhere in there, 125 to 150 ADR potentially for longs. To get a 125 to 150 ADR, we're going to need some news, really. We haven't got any coming up, so it's going to be difficult to get down there. So again, nothing particularly exciting on that. Pound Swiss, as you can see, as exciting as a sideways range. We're up at range highs, which we've bounced off a couple of times. We've gone nowhere for 3 days. We went nowhere for 6 or 7 days, then moved out to see if we could go nowhere for a few more days. We've been going nowhere for a good month in 3 different levels of going nowhere. So pound yen, got out of that short on the pound yen at ADR, still got shorts on it. I'm relying on the yen here to be strong. So my exit is very easy. I can get out anywhere in that accumulation before that high. In fact, I'm just going to move my TP. Now I've seen that from that perspective, I'm just going to move my TPs up. 200 ADR, so somewhere around there, which is above that high and the bottom of that accumulation. So that little range there, if we push back down into that little range, we might find some buyers there. That's where they started buying from the breakout, that high. So if we're going to do that, that's where I think we'll probably get to as a best case scenario, really. If the yen is going to power up, we'll be obviously down here at some point in the next week. So it doesn't really matter, does it? I've hit target. Pound New Zealand, 3 shorts at the moment. 2 drawdown controls done on this one. New Zealand dollar's been absolutely screwed with the Aussie. The Aussie and New Zealand have just had nothing but neutral to negative news for weeks. So obviously pound has had good news and it's been rallying. So I've got 3 positions on it at the moment, so nothing drastic. Average is from where we are now around about half an ADR away from where we are here, 125 ADR in total. So plenty of possibilities for getting out of this, back down in that accumulation. Could come all the way back down to there as part of that move. So if you look at it and measure it, there's multiple places you can measure this from. You know, you could say that whole move hasn't had a profit take yet, in which case you're looking at a 38 to 50 there. That propulsion gap is above that 38 retracement, so that's not a problem as a target. If you then say, actually, no, I fancy the move being from there, that is then a 50% retracement on that move, that propulsion gap. Again, the propulsion gaps will always often lie within fib ratios because they are pushing, accumulating, breaking propulsion. You always, when you have a push, you pull back a percentage of that move. So you never know what it's going to be, but it's a 50% retracement or a 38 retracement, or sorry, a 38 retracement or a 50% retracement, depending on how you're measuring this move. So don't see a problem getting out of it. Just need this pound to pull its foot off the gas a little bit. I'm not sure where we're going to find any strength in the Aussie and New Zealand, but if they do, brilliant. But we're more reliant on the pound weakening here. Longs on this thing, pound US dollar has been an absolute mess for weeks now. We've been range bounds for nearly 2 weeks, going absolutely nowhere. The initial entry was on the H1M5 there, where we had this lovely pullback, what looked like a beautiful 38 bounce. And there was no reason we shouldn't be continuing with that kind of fundamental. However, it just didn't play out, basically. And the pound lost its strength against the US dollar, which was weird because the US dollar was calling terminal rates and we were expecting it to drop. It didn't really drop. It didn't really push. It was just a little bit stronger than the pound. So all we've got is really sideways movement on it. So I've been stuck in this now for over 3 weeks. Three drawdown controls. So 0.75 DD control done. That was a 0.5 win. That was a 0.25% win. So I'm pretty much break even minus the swaps. Waiting. ADR, just over ADR is my average, which it has been forever. This thing just can't put an ADR move in. It's put an ADR move in the opposite direction, just can't get an ADR to the upside. So all I'm looking for is basically for the pound or the US dollar to put an ADR move in, please, at some point. I've only got 3 positions on it. I said this in it, I think it was earlier this week or last week, to be able to sit in a position for nearly a month and only have 3 trades on just shows you how crap this market is at the minute. It's just not able to move anywhere. From the time I got into that trade until where we are right, or the low, basically, it's done 320 pips, 3 ADR in 4 weeks. Just not going anywhere. So in it, stuck in it, have been stuck in it forever. If anything gets anywhere near 0.25%, it's going in my bank. Fed up with it. New Zealand dollar CAD looked like a good looking bottom bounce off of the monthly lows. It's just gone into a horrible cumulative mess down here. Absolute mess for the last week. It's just ugly is the only way to describe it. It's just an ugly expanding range, expanding wedge pattern. Expanding wedge patterns are very, very difficult to trade because you don't know if it's going to go to there or there or just sit. It can go anywhere, basically. It's just not a pattern you trade. So this is sideways mess. We are at range lows. It's been very choppy on the way down as well. So there's a lot of upside potential, a lot of upside targets on this. However, the bias is kind of like that. So there's not really any advantage, you would say, Canadian dollar strong or weak. If the Canadian dollar flips weak, if oil collapsed, for example, 2 ADR in a row, we'll get some weakness off of the Canadian dollar, and New Zealand might be able to take advantage of that. But other than that, this thing's a sideways mess. Just not interested. New Zealand Swiss coming down, got 2 positions on this at the moment. Off of the RSI extension, it only just got extended on the RSI, just triggered on it, basically on the swap. We had a big swap put in, which I got long on. Second entry was taken yesterday, and it's pushing up okay at the moment today. So again, you know, it's very easy exit on this at the minute. It's only 2 positions on it, looking for that low, potentially to act as resistance. I will be watching like a hawk at that high. In fact, that's probably not. Yeah, no, I'm going to get out that high. If we get there, obviously. So this propulsion gap, that high, I'm going to assume, like everything in the world at the moment, we're just going to go range bound on it. So I'll get out there. That's plenty. It's about 0.4%, which is enough. So get out. New Zealand dollar yen, more interested in the shorts than longs with all of them. But as you can see, same as the Aussie dollar yen, you're bang in the middle of no man's land. Could go absolutely anywhere. So just not interested in that. New Zealand dollar, US dollar, weak at the moment, based on the New Zealand dollar interest rates and the New Zealand dollar inflation figures and the Aussie inflation figures. US dollar got no real power at the moment, more than the New Zealand dollar, obviously, as you can see, but I'm not really looking for longs on this specifically, and I can't find a really good spot to want to short it from either. That would be an area I'd be interested in here. Yeah, which is 225 ADR to the upside. So if we started a rally up into there, I'd be interested in possibly shorting it. For the downside, I can't see anywhere to long it because there's no support. So just not interested in that either. The US dollars, US dollar CAD got 3 shorts on. This is a tricky one. So who was asking about getting into positions earlier? If you're still in here, whoever it was, I can't remember who it was, about distancing between trades. Rain, wasn't it? Yeah. So this is a good example. Yeah. So you see, this was my first entry here on the H1 RSI extension. Yeah. Second entry was there. Yeah. We also got an extension, but that wasn't because of the second entry. That was just the next time I got a reversal alert and an entry opportunity. Look at the distance between these trades. 123 pips. ADR on this is 68. So this is nearly 2 ADR between this first and the second entry. Not by design, by the fact that that was the first reversal alert beyond 2/3 of an ADR from the first position that actually triggered. So that was the first time we saw selling price action after I took that trade. Yeah. That was a distance over 3/4 of an ADR. So as you can see, between those two, the average becomes there, somewhere around. So there was an exit opportunity here and basically down there as well. You can see where my TP is here. It didn't quite get to it. So I did have an out there, but it took days to get there. And the danger you have with the spacing when it's far apart like this is you get that pullback on the move, but the move is caused by one massive move. And then it pulled back and did 50% retracement, of which then it's obviously got the momentum to bounce back off again. In this case, it accumulated. So what the other danger is it accumulates and then rallies for the second leg. Yeah. So if you had an entry here and here and here, you will have easily got out with a lovely profit there. But because the distance was too far away, the actual profit wasn't worth me getting out of here because it was just, you know, too far between the entries. And then obviously we got a normal spaced entry up there. But look at the mess it puts you in, having three positions and having them really badly spaced apart. It's got to do 125 ADR for me just to get out with a break even on that now. And if you measure the distance on that move, that's a 50% retracement. And this is my point I was talking about earlier. If the market only does a 50% retracement, which is a normal sized pullback, you don't get out with a profit. Yeah. So this is a good example of it. But the US dollar obviously has been stronger than the Canadian dollar at the moment. These two move in tandem. So they're a little bit like the Aussie, New Zealand and the Euro Swiss, and the fact that when one of them moves, the other one tends to move with it, which means you don't get big swings in this thing because they move at the same time. So when the US dollar rallies, the CAD rallies, which makes the US dollar CAD go sideways. So you need some fundamental that is not affecting the other one to really get some movement out of it like that. So we're just kind of stuck in a grind at the moment on this. When the US dollar starts to weaken a little bit more, great. If oil was to break out of those highs, which we'll look at in a minute, that will give the CAD some strength. And if we've got no strength in the US dollar at that moment, then obviously we'll get that movement back. So just a waiting game on it. But again, three positions, been stuck in it for what seems like forever, but it is only a week and a half, 2 weeks really on this one. Just not going anywhere. So US dollar Swiss, total sideways movement. You can take the shorts up at these highs, so you could short it right now out of yesterday's high or the previous day's high or this week's high, which is basically the high from 2 weeks ago, and try and get some kind of trade down into these lows. The propulsion gap obviously is the obvious target, but that's going to take probably a month if it carries on like this. It's not going to carry on like this, but yeah, it's big moves to the downside. US dollar yen short on this one at the moment, back to break even, two positions on. It's waiting for a little bit more yen strength to come out. So we are interestingly back at this 145. Why have I taken that off? It's basically that high, isn't it? So so there's your 145. So there's a danger of a bounce out of 145. There's also the possibility of the market actually doing this break, getting the warning shot from Japan that we got this week and saying, yeah, all right, we're going to do the same as we did last time, pull it back. So we'll be looking for pushes down into propulsion. So that's what I'm banking on, basically. There's no US dollar news coming out. We've got the PMI figures next week, but there's no other US dollar news coming out that should specifically rally or dump the US dollar. So we're reliant on the yen here. So we're looking for the yen to push it back down again. If we do not get this pullback now, the danger area is obviously 150, which is the previous intervention level. The second intervention, that was the first, second and third interventions. So that's where we're headed, 150. So we'll see. We're either going to get a pullback, but the chances of it rallying all the way up to there without giving some kind of pullback exit, I think, are probably fairly slight. So I'm not really worried about being short in it. The nice thing about being short in this is, worst case scenario, I know that if I go short, I just let the EA scale in for me and I wait for the Japanese to pull the trigger. And as soon as they pull the trigger, I make an absolute ton of cash. It's a 600 ADR move to the downside we'll get. So I don't really care. But I do not want to be long. So that's what I was saying with these RSIs on the hourlies. If you do get the EA trigger you into a long position off of an RSI extension, it could well work, but I'd be cautious with your targets to the upside, and I'd be also cautious with the stops. I'd be kind of wanting maybe to break even as soon as possible, just in case, because if that intervention does come, you're going to get hit hard. So, have I looked at the trading the China 50? No, I'm asleep. So much golden nuggets being dropped. Excellent. We like golden nuggets. Makes me want a McDonald's. Oil. So yeah, somebody asked about oil, Gordy. I did look at it earlier. We were looking at the pullback opportunity on this. We basically stuck in the range. Yeah. So that was our previous range support. Now it's our previous range resistance. That's what we hit. That's where we said, let's take a short. And I'm looking for a long, basically breaking up to $95 a barrel. So I'm not convinced the demand is there for 95. So this is the area I said about earlier on in the week must have been on Wednesday, because that's Thursday. So I must have said on Wednesday in the session. No, hang on. This is the 4-hour chart. So yeah, at some point earlier in this week, I said that's the level we should be watching for a bounce play potentially, which is done yesterday. We rallied hard into it on the oil news. So the oil inventories came out. We've rallied off of that, but the trend line junkies will be selling, and they are selling now. This is what I said this morning, didn't I? When I did it about an hour and a half ago. Watch for the trend line junkies. Yeah, they will be wanting to sell this here because the price bounces off of trend lines. So yeah, they are obviously adding in now. So there is potential for this to come further than this low. So I am more interested in getting in a little bit further down, because I think the market's going to want to pull back on this entire move. And if they're going to do that, I want them here or here. So it's this area here, what I'm looking for a bounce out of, which is about 175 ADR. So we're not going to get to 175 ADR on this today, obviously. But I mean, if we can push down through these lows, that's where I'd like to get in. So your options on this are, if you want to position trade it, you can get in anytime now, and that low is going to hold, and it's going to rally back up into these highs and retest that level, and then see if we can break out to 95. If this is not going to hold, it's going to break, and we're going to look for a 38 to 50% retracement. So scale in down to here, and then wait for the bounce out of the 50% retracement on the monthly move. That's what I would do. I'm not going to trade it. I've got a lot of exposure on everywhere else at the minute, on all sorts of stuff. So oil is not my bag. It seems to be doing what I think it's doing most of the time, but I'm not that worried about it. Also, I can't trade it on my my main account that I'm trading, my other account, my support resistance account, which is what I want to trade this on. I actually can't trade oil on it. I haven't got oil as a ticker for some reason. Really need to change the account, but I can't be bothered. Which shows you how worried I am about trading oil. But yeah, so looking at this level here, somewhere as a second entry. But right now, this bounce has bounced very considerably. So it could well just pull back and do another leg up there. So, don't know. Depends if you want to use a stop or position trade, really, doesn't it? Yeah. That is oil. Got to go and get a haircut today. I look like a mushroom. I've been trying to hold out. It's all, you always get that thing when you're going on holiday, because I'm going on holiday at the end of the month. You always get that thing where you want your holiday haircut, but you don't want to do it too soon, because by the time you go on holiday, then you kind of halfway to needing another haircut. but you don't want to also leave it too long because you look like an idiot for weeks up until your holiday. So I'm getting to the point where I'm looking too much like an idiot to actually do anything about it. So I'm going to get my hair cut today. I've decided. So if you come in the live room this afternoon, you'll see a new Sean me, hopefully. But it is hacking down with rain, so I might not actually go and get my hair cut. In which case, then Monday you'll probably see a new Sean me. Tune in either this afternoon or Monday morning to find out. Morning, I've passed 3 times 20k evaluations on my Forex funds. Excellent. Would you merge the 3 accounts, or is it better having 3 separated accounts? I don't know. You answer that question, not me. Is it better having 3 separate accounts for you, or is it better having 1 big account for you? It's not something I can answer, is it? There's no correct answer to that. It's personal preference. Do you like your cars black or white? Yeah, both cars. Your choice. What I would say is if you're running one strategy on 3 accounts, what's the point? Because you're either going to blow 3 accounts, make money out of 3 accounts at the same time. You might as well merge them. If you're running 3 separate strategies, I would always separate them. I would always have separate strategies running in separate accounts because that gives you a good gauge as to how those different strategies are performing. And also it diversifies your risk. So if you're trading position trading, opening range breakouts, and support resistance bounces, for example, as I am, I have 3 separate accounts, one for ORBs, one for support resistance, one for position trading. Separate strategies are going to perform differently at different times of year and in different market conditions. So keep the money separate. Diversify your risk. If you have a period where ORBs just go sideways for 2 weeks solidly, that account is going to have a terrible time. But the position trading account will pay for it because it will just be doing that. And the support and resistance account will pay for it. Yeah. So up to you. That's what I would do. AJ, look, I look like an idiot all the time, so I am set. Plus, I have a shaved head. That's good. There's nothing wrong with that, is there? I can't actually see your icon in the chat, but it looks like you've got a big beard and no hair, which is, it's the hairy biker look, isn't it? Nothing wrong with that. Beginning a haircut. Since COVID, I've cut my own. Yeah, we tried that. That's why we don't. We basically, we bought clippers and hairdressing scissors and everything in COVID when obviously the hairdressers were no more. And my wife had a go. So we used my youngest son as the first attempt. We all decided we'll wait until the hairdressers open. That's all I'll say. It wasn't good. It wasn't good. They literally came out once. We spent all the money on the clippers, the hairdressing scissors, everything, and we used them once. So, yeah, I probably could do my own. It's not really complicated, my hair, but I'm not letting anybody in the family loose on it. Put it that way. Right. So bank 0.8% today. We'll see if we can get some movement today. But as I said, there's no news today. For the rest of the day, we might have some little bits and bobs of yellow. We've got the CPI coming up in 25 minutes for the euro. We've got the Canadian IPPIs, which are not the real ones. So, yeah, there's no news today. So I'm not overly excited about getting any decent movement to bank anything particularly here. So there's nothing really of any worry at all at the moment. The Aussie US is the only thing that's getting slightly extended by any shape or form, which is nearly 1%. So scaled out of some of it to keep it under control, which is why it's where it is. Just waiting for some kind of upward movement on it. But everything else literally just sitting there waiting for stuff. So I will be trading the US indices this afternoon. CAD yen, I'm out and flat, and I've got myself into the Aussie CAD. So 9.9% banked today, which is nice. 6.5%. So this is the account that I basically dumped 10 grand in here to try and double it, as you do. Just for this month, just to see if I could get some decent support resistance bounces. I've lost focus in it, really, to be honest, because I've only been trading 3 days a week. I've missed some really good trades, and I've taken some really good looking trades that didn't work out and missed the good trades, which means obviously I've missed the profit that I would have had. But done 6.5% so far for this month, which is all right. Not setting the world on fire, is it? But I don't think I'm going to double it. So I was trying to see if I could double it in August, but using 2.5% risk. I just haven't had enough trades on, unfortunately. But if Aussie CAD works out, there's another $500 that will go into the pot. So, you know, if I can do 10 or 15% on it, happy with that. Perseverance, like trading, but with haircuts, yeah. So I will trade the NASDAQ, DOW, and the S&P this afternoon. The DAX is going absolutely nowhere, as I suspected it would after that initial cash balance. It is a fairly nice symmetrical triangle forming, though, however. So if you want to take a trade on this and you are thinking it might break, we are forming a nice symmetrical triangle, which is actually very nearly ready. So watch for a break of that low and a break of that high for a potential run, if we're going to get one. But again, I'd be cautious, to say the least. This is 1.5. This dotted line here is 1.5 hours. So that was the open. That was the initial cash balance. After 1.5 hours, I haven't gone anywhere. Again, this is why we use these ranges, or I'm using these ranges and analyzing these ranges, because this is very, very typical of big opening cash balance day moves. It just doesn't go anywhere, so there's no point in trading them. How do I become an expert at trading Aussie New Zealand? I have no idea. Why would you want to become an expert at trading Aussie New Zealand? It's the same thing. It's the same currency, in effect. I don't know. Can't answer that one. Sorry. AZ, you should put a super aggressive hedging set file on that account and try to double it in a month. Yeah, I mean, the hedging set files, it's done all right this month, but not as well as I'd have thought it had done. But then again, I didn't look at it before the month, so I didn't actually see what kind of drawdown it was in before we went into this flat period. But it's not done bad, the H1 hedging set file with the EA. It's doing all right, but not. It's in a fair bit of drawdown. Well, it was about 22% or something the other day when I looked at it on Wednesday. Oh, come on. VPS. Seems slow every time I launch it. I kind of need to launch this before the live room, really, don't I? Oh my God. Oh. It's thinking about opening. Watching the viewer numbers disappear as they're waiting for a VPS to launch. Great telly. So yeah, look, H4 mean reversion only done 1%, sitting in 6 DD. H1 hedge it's banked 3%, sitting in 28% DD. Aussie dollar Swiss being the main culprit at the moment, and Euro odd. Euro US dollar and US dollar CAD in 4%. So there's a few big ones in there. So I a good 1/3 of that is made up of 4 pairs, which will, as soon as that profit take starts, that'll all just pop over there. But trouble with hedging, you're always in drawdown. That's my account. And ADR reversals, 1.8% this month, 7% drawdown. So yeah, very difficult month, but you get them. This is the reality in trading. You know, you see these P&Ls and these back tests that do that. Yeah, and everyone goes, wow, look at that year. Isn't it amazing? What they don't realize is you sat for a month there not making money. You sat for a month there not making money. And then from that month, you made a loss. And then you got the loss back for a month. And then you started making money. So in reality, what normally happens to a trader is you have periods of weeks / months where you don't make a profit, because the market pays you when the market moves. If the market doesn't move and your strategy needs the market to move, as all strategies do, you don't make money. So you sit here watching paint dry, looking for other things to do, which is this month. It's made some money. It's sitting in some drawdown, which will eventually turn into some money. But this is the reality. Yeah, there is, and I've had more emails this month, I think, about the ORB strategy, with people saying, have I done something wrong? I've set the ORB EA up and it seems to have made a loss. I was like, really? You've put some money on the market, some risk on the market with an order to tell you to get out of the market, and it's lost. And you're contacting me to ask why you've lost money. Because that's what happens. It goes up and down. And if you get the wrong direction, you lose. Sorry, I haven't got a magic bullet that can solve that problem, but that's trading. People still are looking for the Holy Grail. And I think everybody will be forever, won't they? We're never going to find it. But just what happens, you get months which are just meh. You just got to live with them. Sit through them, knowing that we are having 18, 20, 25. I've had a 28% month in the last year. So the 20 plus months come, the average is 10 to 15. You get the craps like this. August, deal with it. You can't change the school holidays. Aussie CAD's just triggered and starting to play Outlook. What did I say as a TP on that? 600. Stop. That's a 1.2, but if we could get ADR, I think that would be a good result today. So I'm not going to be silly. I'll go for 1.2 on it. Right. To be fair, if you make that any more aggressive than it already is, it'll probably blow. Yeah, exactly. It's set up to not blow the account, or to try and not blow the account. But not my bag, hedging at all. I don't like it. Not in Forex with position trading. At the beginning of learning to trade, it's difficult to deal with losses. Yeah, it is. There's nothing you can do about it. You've got to deal with them, though. You've got to accept them. You just don't have to accept them in the same way, and this is what the position trading bootcamp is all about. Yeah, I've, look at the Aussie US, for example. Yeah, I'm taking losses. So I've taken 1, 2, 3, 4 losses on this position since the beginning of August. I'm taking losses. It's how you take the losses that helps you understand how the market moves and stops that pain. Putting a stop loss on a 1% risk position or more and being stopped out 5 times in a row and losing 5% of your account is death by 1,000 cuts. It is horribly painful. Sitting in a trade for 19 days, having lost 0.75%, and still being in this trade with an opportunity to get out of it with a nice profit is no pain whatsoever. It's changing your mindset. But everybody wants to put 1% risk on and make 5 or 10% a day. That's what everybody wants. That isn't what anybody does. Nobody does that. Not successfully and not constantly. Everyone can do it at times. Look at me. Christ. Just made 10% this morning. 9.9% today. I could go and post this in Telegram right now and go, hey, I've got this brand new EA. It's just done 9.9%. And I could show you yesterday's P&L and go, yesterday it did 3.83. What a crap day. Anybody want to buy it for $100? 100 people in the Telegram group right now would contact me and go, yes, please. What does it do? It flips a coin and goes long or short at random with a positive risk-reward ratio. It's just had a couple of good days. I won't show you the two before that lost 9%. You'll buy it. What people do. People sell stuff because it's had a good run. Not going to have a good run forever. Not at that level. Not going to happen. It's good fun, but not consistent. That's what we want. Consistent. Sorry, I was just trying to find the DAX to see if that triangle broke. Hasn't broken yet. So you still were there. So yeah. Those are your real extremes. So it could go. We could get a run. Yes, we've accumulated for about 30 minutes now. So if there is any liquidity or volume left, they probably will start a move. I wouldn't be surprised if we come back at 220 when we start New York, and we find that as well. So just be careful, because you could also get broken. This is the other thing about symmetrical triangles, which annoys me, is you get broken and then it does that. So it actually just turns from a symmetrical triangle into a range. That's the problem with some of these symmetrical triangle patterns. They either break aggressively, which is brilliant, or they go into a range, which is utterly useless. Same as everything. There's a chance of one of those two breaks happening or it going sideways. There's always three things that can happen. It can go up and go down, it can go sideways. That's all it can do. Can't jump out the chart and do anything else, can it? What is your withdrawal strategy? Take it out. There's no strategy. Take what I need when I need it. I don't understand the question, Harold. You take whatever you want when you want it. If you're talking about building your bank up, then yeah, I mean, you can build your bank up and increase your risk. Is that what you mean? So yeah, I mean, if you start, but again, think about what you need to earn. This is what, and, you know, this compounding thing. There's guys at the minute selling compounding courses. Compounding's great. If you start with $1,000, you can compound it up to 10,000, and then you stay at 10,000 and you use that money. Yeah, you can't survive on 10,000 because 10,000 at a 10% return is going to return you £1,000 a month. Can you live on £1,000 a month? If so, brilliant. That's fine. If you can't live on £1,000 a month, that needs to be compounded a hell of a lot more. Getting 1K up to 50K, that's going to be hard work. Yeah. So when you get money, you withdraw it and you use it. So I don't have a limit with prop. I tend to get to 3 to 5K and then I stop and I withdraw. And I say 3 to 5 because it's the difference between being in a trade making me $3,000 and then stopping for the day, or being in a trade, it working, putting a stop on it at break even, and the thing carrying on running and making me 5. That's where I stop that day, and then I take the money out. So that, with that respect, it's to stop you losing the money. If you get a prop account, let's say you got $100,000 account, and the first 2 days you make $3,000 on it, yeah, you'll go, wow, exactly like this P&L look, right? So let's say this doesn't exist. This is day one on your prop account. Take your first couple of trades and you bank 3.83%. Yeah. This is only a 10K account. So let's say it's a 100K account. I've banked 4.2K, right? What you should do is stop trading. And you should take that 4.2K out, because the next day that could happen. And you could blow the account. Yeah. So you stop when you have the money. On your own account, you basically withdraw what you need. So if your own account is 50K or 30K or whatever your own account is, you just draw out money each month if you need it. If you don't need to draw money out of it, leave it in there. Or if you're worried about having it in your broker and something going wrong, then it's entirely up to you how you manage your finances. What you're doing is you are placing a percentage of your wealth into another bank account with a broker. Yeah. And you are using that to put risk on the table. It's your money. Whether I have my money sitting in my bank account, my savings account, my whatever account, my Forex trading accounts, or whether I decide to take a percentage of my money out, 5 grand, and put it into prop and run 10 prop accounts, my money is out there. I have a mortgage to pay, so I draw out money when I need money. Yeah. And you can draw out as much as you like. This is not a job where you get a 9-to-5 salary. Yeah, you get money when you get money. My 19 and 20 and 25% months, brilliant. That's not me going, this is what I've made this month. This is what I've made. There's the mortgage for 3 months. There's the car payments for 3 months. There's a holiday, right? And this is now what we're going to spend on food and stuff. I don't get paid monthly. I get paid when I get paid by the market. It's a totally different thing. There's not I draw out my profit every month. I don't. Because some months I don't have profit. How can I draw it? Other months I have huge profit. I might want to expand my risk that month and start taking slightly higher risk because I've got a bigger account size. It doesn't work that way. Just not that doesn't work that way. Mainly for hedging example, as you're always in drawdown, how do you say CCK? I don't trade that. That account is not, this is not a live account, this hedging account, Harold. This is not live money. This is a demo account trading this hedge strategy. Wherever it is there. I don't trade this. I don't like, would you want to trade that? Some people love it. Some people trade this and they love it. They absolutely love it. This thing returns 30% a month on a good month. And it will do it in a row. It will do 30%, 20%, 30%, 30%. Every now and again, it has a blip like this. And we've had a couple of months where it's done something like a negative 10. But the problem with this strategy is it's always in drawdown because it's hedging. So every time it takes a hedge and the market moves in one direction, you are going into drawdown. This can never be flat because you're always going to have positions on in the wrong direction. You're always going to have exposure in both directions. So if the pound tanks now, this one that's green is going to go into drawdown. So this always sits at 10 to 20% drawdown, which is why I don't trade it. I don't like it. I hate hedging. I show people what they want. Yeah, people wanted to see a hedging strategy, so I built a hedging strategy. I put it into the bootcamp. I don't trade it. I don't like it. I trade H1M5 mean reversion and no RBs. That's it. That's all I do now. I'm running M5 hedge, trading the top 6 majors. Cool. Yeah. If you're only trading 6 pairs as well, obviously your exposure is dropped. But I would say if you're trading the 6 majors, Harold, you are massively overexposed on the US dollar, aren't you? The majors are the pound US dollar, euro US dollar yen, US dollar Swiss, US dollar CAD, Aussie US, and New Zealand US, the 7 majors. If you're trading 6 of those, you are trading the US dollar 6 times. Very overexposed. So just be careful. The US dollar goes on a rally for 3 months in one direction, your account is gone. Exposure, all taught in the bootcamp. That's why we have it on the dashboard. If you are going to trade, you have to, you can trade all of them, no problem at all. But if you're going to do that, reduce your risk dramatically. I teach, well, the way that I trade is with 0.25% risk per entry on a position. Yeah. But that is following the 2 exposure rule. Yeah. So you only expose yourself twice to one currency at that level. If you want to trade all currencies, you need to drop that to 0.1% or lower. Because if you're going to have 3 times the exposure on, ideally you want 3 times lower risk, don't you? Just be careful. DAX broken to the upside. Yeah. Well, broken. Yeah. So we're out the symmetrical triangle, but that's, so there's if you look at the symmetrical triangle strategy that is on the website, there's multiple ways to trade symmetrical triangles. And again, there's no right or wrong with any of this. It's personal preference, really, watching price action. But that break there of that high and that low. So the last 2 points, you got 1, 2, 3, 4, 5, 6. So you can take a break of 5 and 6 or a break of 3 and 4. 3 and 4 are your conservative breaks. 5 and 6 are your aggressive breaks. So that really, I would say, is probably the aggressive break that's triggered. It triggered last candle. And then if you want to, you can add a second position in there and target that high or that high. But bear in mind, this might just hit that high and do that. Not got any volume at the moment, is it? But you never know when the volume's going to start. Again, you know, we don't know when the volume's going to pick up. It will at some point. Just because you get a volume spike as well doesn't mean that that volume is going to be consistently carried on. Someone just placed big orders in the market. Doesn't mean they're going to continue to place big orders in the market. It's random. AZ, I want to trade with H1M5 because it's fairly safe. Yeah. But given I'm starting with a 5K, I'm considering H1 hedging just to accelerate the early growth and then switch to H1M5 later. Yeah. The only difficulty with doing that, AZ, is basically when you get into this, right? So let's say you have a decent month. So this has been a particularly bad week for this strategy. Yeah. So it's done 7.43 loss this week. This was sitting in, I think Monday, wasn't it? We were looking at this and saying we're in 9% profit. You have to go back and watch Monday's replay, but we're sitting in 9% or something on it. So it's lost 7% this week. Next week it will make 10, 12. But I don't know. It'll do whatever it does. It might have another losing week. You never know. But you know, if you have a month where this does 20%, which it does quite consistently do 20%. You then have to deal with this. So you've got to get this flat. So what you do is basically, as it closes off a trade, like CAD yen, let's say that one just was a one hit, straight in, straight out job. You turn the EA off on CAD yen, then turn it off on pound CAD. And every time something goes flat, you just turn it off. And you just wait for the rest of this to play out. But some of these that are in big squeezes, obviously, every time you're doing this, there's a chance that this will gradually get bigger and bigger and bigger because you've got no profit, which is helping you to pay for these drawdowns. So it can be quite tricky to get out of these. Same as the account that I've got here at the minute. I'm going off on holiday in a couple of weeks' time. I like to try and get as flat as I possibly can before holiday, which means not taking new positions. I'm going to leave this running this year because it is very, very flat this year. Last year, I did 19% or 15% or something in August. We looked at it. I can't remember what it was, but I think it was 19% I did last August. So you can see the difference between this year and last year. It's chalk and cheese. Same strategy, doing exactly the same thing. Totally different results. I like to try and get as flat as I can. It's difficult to get flat because when you're sitting in this drawdown, it's not down to me whether I go flat or not. The market needs to move these positions into profit so that I can close them. So if I'm sitting here and we go sideways for 2 weeks before I go on a holiday, I'm going on holiday with 4.3% of drawdown. I can't do anything else. I could close it and take a loss month, or it depends what P&L is, obviously. But the way this is moving, it doesn't really matter. But if you're trying to trade a strategy just to try and build an account faster and then switch to a different strategy, which is sort of more consistent and safer, you've got to bear in mind it might take you a month, 6 weeks to shut that other account down. That hedging may take weeks or a month. If you get stuck in a squeeze on a hedge and it doesn't get out of it, you can't do anything. So what you could do is, on the same account, every time you go flat on a hedge, shut that hedge down and load the H1M5 set file onto it. And just switch set files and then start trading a new set file on it. Tricky. But if you get 3 good months in a row with which you can do with the hedging strategy, you could easily grow that 5K to 7.5 grand very easily. But I wouldn't say you can hedge consistently. I mean, this account, if you look at the hedging account, I don't know how long it's been running. And I've got a feeling, because it's a demo, I've got a feeling we lost the history on it because they don't give you all history. With demo accounts, they quite often wipe the previous months off, which is, I think, what happened on this account. Yeah, look. So this now only goes back to June, 30th of June. So this has done 37 grand since the 30th of June. That's when it took its first trade. Sorry, closed trade, July. So 3rd of July was where the data goes back to now. We've done 37 grand since the 3rd of July, August. So we've only got 6 weeks of data, haven't we? So there you go. That gives you an idea of what it did last month, doesn't it? So we're sitting on 3% right now. It's done 37%. So last month was 30+%. That doesn't sound right, but it is. That's what it is. That's what it's done. Maybe it was a big month. I don't know. I didn't look at it. Yeah, it's difficult. I don't know. August is not the month you want to be thinking about trying to measure and do anything clever, because it's just a hideously unpredictable one. US 30 looks like it wants to break to the upside too. Yeah, they usually all go together with the indices. They're all just, we're not going anywhere today. This afternoon, we will trade this afternoon. We'll trade the US dollar, US session this afternoon, and hopefully get some breaks there. But it is Friday afternoon as well with no news, so I'm not expecting wildfires. Sorry if you live in Tenerife, they are having wildfires. What's your streaming schedule with your vacation coming up? Well, I'm not streaming while I'm on holiday. Basically, I shall be in a different country, so I won't be streaming. So as normal at the moment, I'm doing Mondays, Wednesdays and Fridays, twice a day, AM session and PM session. I'm on holiday from the 27th. So the last week of August, first week of September, I'm not here. And then I'm going to see how it goes in September. May go back to normal every day. I may stay at 3 days a week. Because I don't... with analysis I do every day, it's the same thing every day. I'm teaching basically what I do and how I do it. You can see every single day what I'm doing and how I'm doing it. Nothing's hidden. It's just looking at the ADR dash, looking at the RSI dash, looking at support and resistance levels that are coming up. It takes days for things to get to places. So if I do an analysis on a Monday, by Wednesday, I'm saying the same thing. Friday, quite often I'm saying the same thing. Yeah. Fundamentals, they don't change every day. So, it's a case of if the US dollar is strong because of XYZ, when I come back on Wednesday, it's still strong because of XYZ. Just because I didn't say it on Tuesday doesn't change anything, does it? So I don't necessarily think I need to do every single day of the week. I can post what I'm closing out every day in the group in Telegram. So, as I did this morning with the pound yen. You know, so it's just, I'll see. I quite like working 3 days a week. I'll say working, I'm working every day, but doing the lives every 3 days a week, because it's nice. I get 2 days off to do other things. And what I want to focus on is more strategy development, which I'm not getting time to do, which is nice, having 2 days to do that. AZ, I was wondering about a strategy where you only open live positions once you're in X% in drawdown on a demo. You can do. You can try it. I don't know. People used to, in my original group that I had, which I ran through Zoom, people used to wait until I got into 3 positions before they'd take one, which is basically what you're saying, isn't it? So get an EA running, and then when it's got X positions in drawdown or 3 positions in drawdown or X% in drawdown, take the first one on a live account and assume that you're only going to get into 4 or 5 or 6 on the demo. Yeah. But yeah, I mean, you could do that. But then don't forget, the vast majority of positions that I close out that work normally are 2 to 3 trades. So you'd miss all of those. So you got 2 there that are 4. You got 1 there that's 4. Every other trade sitting here right now is a normal position trade. It's got 1 to 3 positions on. 90% of my trades should be 1 to 3 really, 1 to 3 positions, and then they close out in profit. So if you waited until X amount of trades in drawdown, you'd be missing the vast majority of those opportunities. Look at all these 70s. So you'd have missed that. If you'd have got in as position 1, you'd have missed that, because it wouldn't have gone into drawdown. Swings and roundabouts. The other thing you can do, rather than doing that, AZ, is why not use the 20/80 extension instead of the 25/75 or 30/70 on the RSI. Use a different RSI extension and just get in on those A pluses, because you'll miss all the 70/30 bounces that work. You'll miss all the 75/25s that work. But the 80/20s typically are much stronger moves and much stronger elastic band snapbacks. So maybe take those only. You'll get less opportunities, but there'll be less positions and less drawdown. Safer. You could take those with higher risk. Yeah. Backtest all this stuff. You know, this is what the backtester's for. You know, put the market reversal alert EA in the backtester and test the different RSI levels, right? And see what drawdown you got, see what return you got, see what happened. You know, and if you find that those 80/20s, when you take the 80/20s and you were taking the 70/30 levels, if you suddenly find that your trades drop by 60%, but your strike rate and your number of trades per position drops to 2 and it never goes above it, why not quadruple your risk? So take a third less trades with 4 times more risk, knowing that your strike rate is that much higher and safer. You're going to make more money probably doing it that way, but you've got to be incredibly patient, because you may not get, I mean, look at the RSI dash. Yeah. So only triggering trades when you get here. Have you seen me talk about anything in that column this month? I can't recall seeing that column light up this month. So what would you have done this month? And again, going back to what somebody was talking about, when do you do withdrawals? You can't even get any bloody trades on. How are you going to withdraw anything? Got to find that balance that, and you know, there is never a right or wrong. You know, and I always get, when those people were saying, wait for Lee to take 3 trades, then get in. It's much better strategy. It is. But then when you're waiting for me to get in 3 trades and that month where I returned 25% and I never took more than 2 trades because everything worked out perfectly, you didn't make any money. I made 25%. There's no right or wrong. There's different. That's all there is. It's different. There's no right or wrong. So you just do what you do, get in and deal with it. Yeah. I'm dealing with this. This is all I'm interested in. What have I got to deal with? That's the only thing at the moment I've got to deal with. Everything else is just normal, and I'm just waiting for stuff to happen. That I'm going to start possibly to deal with at some point next week. That's my focus. How I got in doesn't matter, does it? Because I don't know where it's going. If I knew where it's going, I would do it. Because I don't know where it's going, I just get in and wait. So how you get in and wait is up to you. So having a demo running, and when it gets into a certain drawdown, taking a trade on live is just another strategy. How is it going to be right or wrong? What's the strike rate going to be? What's the return going to be? What's the draw going to be? You're not going to know, are you? Because you don't know every time you get into that trade whether it's going to work or not. But it's another opportunity. Yeah, try it. All I can say is try it. It might be the holy grail. I don't know. What country am I heading off to? Croatia. Fingers crossed it's not caught fire. On holiday, I'll be popping into Telegram. Yeah, I'll still be in Telegram. So basically, when I go on holiday, I take my laptop with me, and every morning at coffee, sometimes at lunch, and every evening before dinner, I check my P&L, check what's gone on, and obviously pop into Telegram all the time. So yeah, there's not a lot you can do around the pool, but you know, look at your phone, look at Telegram, jump in, cool off, get out. Lie there, go to sleep, wake up, look at your phone. Luckily, I've got MetaTrader on my phone, so I've got Telegram on my phone, so I'll be all right. I heard someone using a stop loss strategy talk about only live trading when his account was on a losing streak of X number. Yeah, again, think about it though, right? So if you've got a strategy with a 50% strike rate and you take 100 trades, how many losing trades before you take a live one? And then what happens after that live one that you took? Do you get another losing streak? Yeah. So there's 50 trades that you're going to lose and 50 trades that you're going to win with a 50% strike rate. What order are they coming in? So what he's saying is, I'm going to try and predict the order of my winning and losing trades. So what's he doing? Picking at random a long and a short. Because he's looked at his P&L or he's looked at his back test and it said that he didn't get more than a losing streak of 4. So let's take 3 trades and then we'll take the 4th. So you get 1 winner, and then what do you do? Carry on trading, or do you wait for another losing streak? What if it gives you 5 winning streaks and you miss them all because you're waiting for a losing streak before you take? See what I mean? It's rubbish. It's random. This thing is random. I can't say it enough, and I say it every day. It goes up, it goes down, and it moves through time. You have no way of predicting a winning streak, a losing streak, or a direction or a distance. You can't predict any of it. Every strategy and system tries to predict the future. There is nothing that can. If I had an EA backtest and it said that I lost, on average, every 4 trades, you then had a winner. If you replicate that on live, those conditions that you've just done that analysis on are never going to be replicated in the future. They only appeared in the past. Take that test and you run it over a period 7 years prior for the same amount of time, you will not get the same results. You will not get the same results next year either. Backtests will give you an average of whether an edge exists by doing A, B, and C over that period of time. What happens over the future is different. So it's good for modeling what happens. But you can't model win and losing streaks, because win and losing streaks are dependent on data. The data is going to be different. So he's basically built a strategy modeled on something that's never going to happen again. I mean, stupid if you want, but I would call him stupid. Bottom line is get into the market and get out when it's green, and don't be greedy. Exactly. I've said this many times. You've heard me say it in here before, right? If the banks and institutions cannot predict where the market is going because there are 10 people in 10 banks that move this market and none of them agree with each other, if they can't predict the future, what on earth makes you think you can? Yeah, Barclays are sitting there right now, haven't got a clue whether the Aussie US is going up or down today. They have the power to move it in a direction they want to, as long as the other 9 banks do not disagree with them. If 3 banks decide they want to go long today and 7 banks decide they want to go short, those 3 banks going long are going into drawdown. The difference between the banks and the retail traders is they do not use a stop loss. They wait for the market to come back and then they exit the position because they can move it back. When those 7 banks decide that they've had enough and get out their positions, the other 3 will push back and make their money. They have the power to move it. We have the power to watch it. So if you do the same as the banks do and try and identify when they are likely to do that, you will make money. If you try and predict the future and use an order to exit the market with a loss, you will get exactly what you've just done. What you do on this chart will happen. If you try and come up with some complicated way of predicting the future, you might as well get a crystal ball or an 8-ball. You can't do it. No one can. The banks can't. And all these secret formulas that people buy with, I used to work in Barclays. I've got a secret candlestick in a candlestick system that you can buy for $1,000. No one knows about it but the banks. The banks don't use candlesticks. I know because I know people that work in the banks. They don't use candlestick charts. So your candlesticks inside candlesticks from the bank that you used to work for is absolute bollocks. Well done on making £1,000 out of every schmuck that wants to buy the course. That's all these people do, yeah, because they can't come up with anything that can predict the future. So what they decide to do is sell something to people, sell the idea of being able to predict the future. They're selling an idea, not any way or shape or form of finding out. If I'd known this was going down, do you think I would have pressed the button long? Of course I wouldn't. It's just, I thought this was going down. I pressed the button short. Why am I in profit now? Because it did what I thought it was going to do. I had a 50% chance of it playing out. And on this trade, my 50% was right at the moment. This afternoon, when this hits that level there and bounces up and ends up here, and I'm sitting in 0.9 in drawdown, I will be wrong on this position. Right now, I'm right. This afternoon, I could be wrong. This afternoon, I could be double right and out with a massive profit. Who's going to tell me which way this is going to go? Is there any bank I can phone right now and say, excuse me, are we going to hit ADR today or am I going to stop out on yesterday's high? They don't know. I've had, how many winners in a row have I had? What should that guy's strategy tell me to do next? Yeah, I've had 3 winning trades in a row. This is looking like it might be my 4th winning trade in a row. Should I stop now? Because the next 3 are going to be losers, or should I carry on because I'm going to get a 6-win streak? Think about how ridiculous it sounds when I put it like that. I've had 3 winners in a row, so because the back test showed me that I didn't get more than 3 winners in a row, I shouldn't take this next trade on the Aussie CAD short. Rubbish. It's all rubbish. Get in, get out, make money. That's all you can do. Nobody can tell you when to do it. Right, I'll leave it there because I've got other things to do before this afternoon. So back at 2:20, and we'll trade the US session. We'll have a look at how the FX market's moved, which doesn't seem to be doing a lot at the minute. But anyway, we'll see where we go. There's no news to worry about. Just keep an eye on financial juice. Just in case there's any big market movement. Japan Defense Ministry, China and Russia's joint bomber flights and naval passage around Japan is a serious concern for Japan's security. Again, they're ramping up the worry. That won't be good for the markets if that kicks off. But yes, just keep an eye on financial juice. Other than that, it's just a case of waiting for stuff to play out basically today. So back at 2:20. trade the US session. Anything you need before that, I'll be in Telegram. Other than that, have a good day, and I will see you guys later. If not, Monday morning for the Frankfurt session again at 7:50. Okay. So have a good one. I will see you later.